Hey everyone. Thank you so much for joining us tonight. Whether you're live or watching the playback, we know there's a million other things that you could be doing. So the fact that you're here learning with us about homeownership really means a lot. My name's Jessica. I'm a local real estate agent, and I spend a lot of my days helping people buy and sell homes. And one of my favorite types of clients are first-time home buyers because this process should feel exciting and not confusing and intimidating.
Absolutely. Jessica, thanks for joining me. I'm Connor Webb, mortgage loan originator. I help with the financing side to get you the money to buy the house, and then Jessica helps you find the house, negotiate, and get you to the closing table. So, yeah, if you're watching, thanks for joining us, and that's our contact information up above if you'd like to reach out to one of us, both of us, to get the process started if you're interested in buying a home in 2026. But other than that, let's get into it. So, first off, before you even start the process, before you reach out to either of us, here's a few questions to just talk through amongst yourself to think on before you actually connect with us. Looking at planning your finances. So, thinking about how much out of pocket money you want to come in with at the closing table, whether you're wanting to come in with the minimum down payment out of pocket, whether you have a fixed amount, in mind that you're hoping to come in with. Think of the dollar amount that you're not wanting to exceed at the closing table so that I myself on the pre-approval side can help guide you the best that I can. Now, the typical purchase transaction is going to be a 30-day closing. That's the typical length of time of a closing. Just to clarify, myself being a lender, I'm not a financial planner, so I help you figure out what you can qualify for on the max end. But then to determine what might be best for your financial situation, I would still connect with a financial planner, determine what max monthly payment you're not wanting to exceed with everything included, so that you're able to stay within that price point to keep you within your budget. And ultimately, only you can decide your budget. So that's really up to you and your financial planner. But there's going to be two different cash numbers that you're going to be thinking about. So one is going to be the upfront, like I mentioned, your total out of pocket. Secondly is the monthly payment. So again, what max monthly payment are you not wanting to exceed with everything included? And speaking on the monthly payment, there's really four different variables that go into this. The slogan is PITI and then plus. So it's the principal and interest on the mortgage. It's going to be the property taxes, the property insurance, the mortgage insurance, and then also an HOA if there is one. These different factors will make up the total monthly payment. So when I quote you a monthly payment, it's going to include all of these different pieces, and it could vary widely depending on the property, depending on what the property taxes, the HOA on a property are. Now, with the upfront dollar amount, you might be thinking about a certain down payment amount that you're planning to come in with, but on top of the down payment, there are going to be some additional costs associated with buying your home. So, as you can see here, there's three different pieces. One is the down payment, two are the closing costs, and then three is going to be the prepaids. So, there's various closing costs to doing business on the loan. There's also going to be escrow and title fees to record the transaction, making sure that title and ownership of the property goes from the seller to the buyer. Then on top of that, there's going to be a certain amount of prepaid property taxes, insurance, and interest that will be due at closing, depending on which day in the month we close in and which month we close in. That top figure, the down payment, that will depend on which loan program you end up going with. If you're well qualified above a 700 credit score, you're likely going to be looking at a conventional loan, which has a 3% down payment minimum. If you're FHA, you might be a little lower of a credit score. That would be a 3.5% down payment. However, if you're a veteran, you have the ability to come in with a 0% down payment. Same thing with USDA, which is a Department of Agricultural loan. It'll have to be a little bit more rural of a property, but we could look at that option as well. So all of these different factors are going to go into making up that final amount that you'll bring in at closing. And Jessica, if you want to talk about maybe, looking at selling a home, if you are selling a home, how do we get to that net number of what you're going to net at closing?
Yeah, so if you are selling a home, yeah, chat with us first and you'll just give us some basic information like how much do you still owe on your current mortgage? And then we'll also calculate all of your closing fees, your realtor fees, your taxes, things like that. And we'll be able to give you an estimate of what you would take away after everything at the closing table.
Now, when you're going through this process of getting pre-approved of shopping with for a home with Jessica, figure out why. Figure out your why. Why are you looking to buy a home? Is it the American dream? Are you looking to downsize? And just try to stick to your why, because emotions can get high throughout the process. You see a property that you absolutely love, but it's above your price point. Just try to stick to your why and your fundamental goals so that you can keep your emotions and expectations in check throughout the process as much as you can. So step two, after you've already planned your finances, kind of thought about the monthly payment, the cash to close number that you're wanting to come in with, now it's going to be about finding a lender, which is where someone like myself can come into play. And so essentially, like I described, I help you figure out how much of a loan you can get, which loan programs you can qualify for, which sales price range ideally you want to get shopping in to stay within your budget. And talking about interest rates, here is the long term tracking of interest rates. So, as you can see, the average is somewhere in the 7.5% to 8% range over the long term. Obviously, the 80s, there's a big spike above 17%. Right now, during COVID, 2020, 21, 22, they were extremely low, around 3. Now we're in the range of, low sixes. There's some volatility currently happening with some conflicts that are going on, but right now you're going to be somewhere in the 6 range, but we're in a great spot overall compared to the long-term average. Now, talking about why you should get pre-approved, why does this even matter? Well, like I described, we're going to figure out the loan type that you'll qualify for, and that is best for your situation. We'll help you figure out what your max purchase price is going to be, what your ideal purchase price is going to be to get out shopping with Jessica. We'll figure out where your interest rate is going to be at, because it does vary depending on the person. We'll figure out exactly how much of a down payment you want to come in with, the closing costs for your situation, and then we'll get you out viewing homes with Jessica. So during the pre-approval, you're going to want to create a Google Drive folder ideally. And here's a lot of the generic documents that you might need throughout the process. And actually, after you complete an application with me, it'll auto prompt you to upload documents directly to your file. But these are some generic documents to gather up when you're ready to get the process started. So if you're an employee, we'll be looking for 30 days pay stubs, 2 years W-2s, 2 months of bank statements, a driver's license, maybe a current mortgage statement if you have a current mortgage. But these are the basics. If you're self-employed, we might need 2 years of tax returns, 1099s, but these documents here cover a good amount of it. So just try to stay organized if you can. If not, then we could just request documents individually as we get your application done. So we'll take your application, we'll pull credit, you'll send documents in, we'll verify your income. You'll then receive a pre-approval estimate on the max range that you can go up to, and then the ideal sales price range to get shopping in, including the total out-of-pocket cost to you at closing and the total monthly payment that would include. I would then send a pre-approval to Jessica when you're looking to make an offer on a property, and that would be specific to your offer amount so that you're not telling the seller, hey, I qualify for more. It's that you qualify for exactly what you're looking to offer. And here's a few do nots. When you get pre-approved and you're in the process of looking for a home, do not make major purchases without talking directly to me, especially incurring additional debts or opening up new debts that, adding additional monthly payments will certainly affect your qualifying. Do not change or quit your job. You do need income to purchase a home and to qualify. So don't do that. Try not to move large amounts of money around before you contact me and explain what's happening. We will have to document the paper trail of where money is going and coming from. Don't even pay off debts or collections unless you talk with me, because we might need a certain amount of assets. And if you were to pay something off, you don't have that money anymore. That could be a potential issue. And then don't make late payments. Just make your minimum payment on time. Keep things in order until we reach that finish line. Now, here's where Jessica comes into play.
Okay. Well, thanks for all that information, Connor.
Yeah.
That was a lot of good stuff. And I know that some of this can sound overwhelming or like a lot, but that's what Connor and I are here for, to walk you through it step by step. And like he said, if you're not sure, always reach out and ask us. We're happy to answer any questions to make sure that this goes real smoothly. So before I go on, I just want to tell you a quick little story about one of my favorite first-time home buyers that I've worked with. And they came to me a while back and they said, we don't think that we're quite ready to buy a home yet, but we just kind of want to chat about it. And so I said, sure, I love that. They thought that they needed 20% down. They thought that their credit wasn't good enough. And so they thought we would love to buy a home, but that's probably in the future. So we sat down and we talked about everything and looked at their finances and their credit score. And we met with a lender just like Connor. And about 20 minutes later, we realized that they could buy now. They were ready. And they ended up buying a home a few months later. And the part that I love is that a year after that, they invited me over to their new home for a barbecue to kind of show me what they had done. And what they said was, man, why didn't we do this sooner? If we had known, we would have done this sooner. And so the truth is, like, a lot of people aren't buying because they aren't really ready. It's because they don't think that they can. So that's, the next part of this. We're going to talk about the rest of the process and the actual part of looking for a home. And hopefully you can leave tonight thinking, okay, am I closer to home buying than I thought that I was? So, when you're shopping for a home after you've gotten pre-approved, and that is a very important part, because when we do find that dream home of yours, we want to be able to put an offer in right away, and we can't do that without the pre-approval. So getting the financial part done first is important. So the do's for home shopping: follow your agent's MLS updates. So once we chat and you tell me what you would like in a home, I compile all that information together, and I set up a search for you. And daily, weekly, whenever something pops up on the MLS that fits what you're looking for, it'll come to you. Those are the homes that you can look at. And if you see something you like, we go take a look. You will have a pre-approval, like we said, and when we're looking for homes, you try to stick to that budget. Let's see, use your why to set a timeline and urgency. So we talk about all this. When you contact me, we'll set up an initial meeting and we'll go through, what are you looking for? What's your budget and your why and your timeline? How quickly are you looking to purchase a home? And then we'll also make a very important needs and wants list. And this will happen as you're looking at homes on Zillow and the MLS as well. And as we're going out to look at homes, sometimes things that you thought you had to have in a home, as we're looking, you realize aren't as important. And other times there's things you didn't think you need. And once you see it in a home, you realize, I can't live without it. So we go through that. And especially as a first-time home buyer, this might not be your forever home. So sometimes you choose between your needs and your wants, and you realize it's just great to have a home and be creating equity for yourself and building wealth for yourself. And yeah. Okay, your don'ts. So don't get emotionally attached, especially if this may not be your forever home and it's your first home. Go with your needs list and realize that, this may become a rental for you in the future, or you might sell this home in the future. So don't get too emotionally attached. Move too fast or too slow to schedule a showing. Oh, yeah, that's true. So you just want to make sure that you're following all the steps that Connor gives you and the steps that I give you, so that we are ready to get out there and see the homes when you're ready. And this market is sometimes unpredictable. So some houses right now, they're not moving super fast, but some houses are going quickly with multiple offers. So we just want to be ready. If we see a home we like, we're ready to go take a look. And yes, don't feel like you need to see every home. So that's why we talk about your needs and your wants list. and we target homes that fulfill the needs for sure, and then some of the wants. If you go out and see too many homes, it's actually doing yourself a disservice because all the homes kind of blend together. It's hard to figure out which ones you want. It's kind of that sometimes too many options is not a good thing. That's why we try to narrow it down and we see homes that fit your needs list and then some of your wants. Okay, writing an offer. So this is, for especially for first-time home buyers, kind of the nerve-wracking parts, but as an agent who specializes in first-time home buyers, I'm here to walk you through that and make it as simple and least stressful as possible. So when we're writing an offer, there's lots of things we're going to consider. I'm going to chat with the listing agent and get as much information about the home as possible, about the seller as possible, about what the seller is looking for in a good offer. And then we're also going to keep your needs in mind. First and foremost, I am your advocate and your agent, and I have your best interest in mind. So, what is your pre-approval for? What is your situation? And then we're going to put together the best offer for you. And we'll talk more about those specifics and the choices that we have when we get to that point. But we'll submit our offer. And then after that, the seller can accept our offer or they can counter our offer. And if they accept it, the contract will become the map of the transaction. And if they counter it, then we'll discuss our options from there, and eventually we'll get to an accepted offer. Okay, so some tips. Um, so I talked about this a little bit. We're going to write an offer that helps us win. So me as the agent, I talk to the selling agent and I find out as much information as I can. And sometimes we're in a multiple offer situation and we want to know what exactly does the seller need? What would help us get our foot in the door and be the offer that's picked? Through that process, I will be discussing with you how can we possibly change our offer to make it more competitive, especially if they counter offer us. We'll be chatting about that. How do we feel about it? Do we want to counter back? And then also, if you have a good lender, and if you're using Connor, you do, your lender will call the listing agent and vouch for you. So well, Connor, you can say, what do you usually say when you call listing agents?
Yeah, that can make the difference because, basically my conversation with the listing agent is stating that, yeah, we have their application, we verified income, their credit is solid, they're well qualified, there's no big red flags or issues, just reassuring to the listing agent that their offer is strong, that they're well qualified. And this is where honestly having a local lender really comes into play. If you're going through an online bank or someone that doesn't work evenings or weekends when you might be submitting an offer, like those conversations make a difference. And so to have someone like myself to help vouch for you and your qualifying can definitely go a long way. And then one question and a topic that was mentioned on here is the seller credits piece, and that's something that's been a lot of my buyers have been getting, and our buyers have been getting seller credits. Can you just walk through, Jessica, maybe like an offer of requesting seller credits? Maybe it's a 500,000 asking price, how you would try to get $10,000 of a seller credit, maybe some scenarios.
Yeah, sure. So if we had a $500,000 asking price, so there's lots of different ways you can structure an offer. And like I said, first I would talk to the listing agent and see what their seller would prefer. Some people, feel better about lowering the asking price, and some people feel better about keeping the asking price where it is and giving a credit kind of on the back end. So first I would talk to the agent and kind of get their feel for that. Or if we feel like, maybe this house has been sitting on the market for a while, or maybe it's really just overpriced and we want to get, $25,000 off total, but maybe we feel it's aggressive to go in asking for $25,000 off the list price, then we might submit an offer with a offer price of like 490,000 with $15,000 in credit, which would be a credit at closing time. And the contract states that we can use it for closing costs, we can use it for buy down credits, and we can use it for a variety of different things. And if you have a good lender, they'll help you kind of use that appropriately because sometimes if you get a big enough credit, you don't have enough closing costs to use that. And so your lender will help you use it in different ways. Like, actually, Connor, the last deal that we had together, that kind of happened. We had a
Right.
large credit, and do you remember how we ended up using all of it?
Yeah, so we ended up using it to fund the HOA payment for a certain amount of months. So essentially, yourself as a buyer, the only thing that you have to come in with out of pocket is the down payment. So let's say you have a 3% down payment on a $500,000 sales price, that's $15,000 out of pocket. Any additional costs or prepaid amount that is due at closing, the seller could cover all of that. So in our situation, we had a seller credit to cover all of the closing costs, all of the prepaid property taxes, insurance, and interest. And then we were able to use that to, like I mentioned, prepay a certain amount of months of the HOA payment. And there's various other ways that we can utilize that. If we have enough, we could look at buying down the interest rate even further, which would be a cost. So essentially, a seller credit is a way for you to reduce your out of pocket at closing or to use it towards buying down your interest rate and lowering your monthly payment. So if you have questions on that, reach out to myself or Jessica and we could walk you through that process.
Yeah, and right now we are still in a buyer's market. So
Hmm.
it's a great time to get in there. Sellers are still giving a lot of credits right now, and they're really willing to negotiate. So it
Hmm.
is a really good time for that.
Yeah. Now we're officially under contract. Congratulations.
Yay.
Moving on to the next part, which is the home inspection.
Okay, so how it works is when it's time for the home inspection, we have a timeline that we're following. So we have 10 business days to get, or sorry, 10 total days to get our inspection done. And we're going to use a certified home inspector to look at the home. So we have some options there. We always get the home inspected, and then you have the option of getting a sewer scope and a radon test, or if your home's on septic or well, you get those tested as well. I always suggest we do all of the testing available because it's always better to see what's going on with the home you're committing to purchase before you're actually the owner of it. Because we want to, if there's anything, big that needs to be repaired or fixed, we want to negotiate that. So, the inspector comes in, they do an inspection that takes about 2 to 3 hours generally. Then they'll walk you around the home and then they'll show you what they found and you can ask any questions. And then they give you their inspection report that night. And our inspectors are wonderful. They have lots of pictures and links and it's really comprehensive and you can ask them any questions that you want. After that, we chat, me and you, and we decide what are some items that you think might need to be repaired, some items that you're uncomfortable with, some items that you think the seller should be responsible for fixing or repairing. And then after that, if there are major things that we might want to ask for, we get contractors or subcontractors or specialists in to give us bids for those items because the home inspector is kind of he's the one that spots things that might be wrong with the house, but he's not necessarily an expert in everything and how to fix it or how much it might cost. So he just identifies them and then we get the experts in and we get bids for those. So after we kind of get all of that in order, and me as your agent, I have tons of connections. I have people that I work with all the time. So you don't have to worry about, who am I going to get to give us these bids? Who am I going to get to come in and fix these things? Even who am I going to get for my home inspector? I'm able to give you references for all of those. I set up those appointments. I will go meet the contractors. So it's all part of making this process easy for you. So after we get everything back and we talk about it, then we decide, okay, what do we want to do from here? This is a big part of the sales process and it's a big contingency that we have. So the options that we have are we can negotiate. We can ask for either repairs to be done, we can ask for more money off of the purchase price, or we can ask for another credit at closing, as long as we have an amount left that we can ask for. That goes to the selling team. Then they decide, are we going to accept that and perform the repairs or give the credit or give the money off? Or are they going to counter us? So they might come back and say, we'll do this, this, and this, but we won't do this. And we go back and forth until we have a meeting of the minds or until we don't. So hopefully we do. And I would say most of the time we do come together on these points. But if not, then this is your chance to walk away if you want to. This is one of your contingencies. So you can say, this is too much for me. I'm not comfortable with this. And you can terminate the deal at this point, and you would get your earnest money back.
Now, getting into homeowners insurance, this is going to be another part of it. Essentially, where you're going to have to be reaching out to your insurance contact to get a quote on the property. At this point, we just need an actual quote. You don't have to prepay your policy. You'll actually pay for an entire year of homeowners insurance at closing. That is a part of your total out of pocket. So you'll just be reaching out, and basically homeowners insurance will cover if there was a fire to occur, if there's flooding, depending on where your home is located, any natural disaster. If you're buying in the Pacific Northwest, there's going to be various flood zones. So you might need flood insurance depending on where the property is located. You get to shop for the homeowners insurance yourself. So you get to do that. You can shop between companies. You can go with an insurance broker to find what is going to be best for your fit. And then the monthly cost for the homeowners insurance, that will be a part of your total monthly payment. So you'll make one payment at closing, or sorry, every month. That's your total mortgage payment, your homeowners insurance, your taxes, your private mortgage insurance, that will go into your escrow account. And so once your homeowners insurance policy comes due at the end of the year, then the escrow account will actually pay for that when it comes due. And like I mentioned at the beginning, you'll have a full year of homeowners insurance that you will be paying upfront at closing. So now getting into the underwriting process. The underwriter essentially is the decision maker within the lending company. They are the one that takes a look at the application, all of the documents we've gathered up to this point, how the file is structured, and they verify that it fits the guidelines of the loan type that we're looking to use for the financing. And so, yeah, the underwriter is the decision maker. So we're looking to get the file buttoned up and ready to go so that when it does reach the underwriter, we have as much documentation as we can have so that they can return a list to us that is as short as possible to gather from you after the fact. So essentially, underwriting wants to make sure that you, the buyer, have the ability to repay the debts or the loan, and that the loan follows the guidelines. And I will update you as soon as we hear back from underwriting. Also, my team will reach out to you again with that additional list of items that we might need. More often than not, we'll get a conditional approval. Every now and then, we'll get a final approval if we already have the appraisal back, which we'll cover in a bit. But in most cases, it's going to be a conditional approval. It's an approval that is conditional, meaning that there's additional conditions that are needed to be filled. So we need additional documents to check off certain items. That leads us into the home appraisal. So once the home inspection is back and everything is good, there's no big red flags, you've decided to proceed with this property, then that's when we'll get the appraisal ordered. Essentially, the appraisal is where an appraiser would go out and determine the actual value of the property that you're looking to purchase. The appraisal is really just for the lender to verify that they're lending a certain amount of money that is relative to what the actual value of the property is. And I'll get into a couple of scenarios here. If the appraised value comes in higher than the purchase price, also if it comes in lower than the purchase price, what that looks like. But ideally, of course, the appraised value is going to be at or above the purchase price. You can walk into some equity at closing. And the lender, we use the lesser of the purchase price or the appraised value, as we'll get into in the scenario here. And so the appraisal inspection is scheduled. You, the borrower or the buyer, will be paying for that appraisal out of pocket. And then after the fact, you'll get a full copy of the appraisal report. You'll be able to see exactly which properties the appraiser was comparing your property to and how they came to the valuation of the home that you're looking to buy. So scenario one, this is the ideal scenario. Again, $500,000 sales price. Let's say the appraised value is $520,000. That's great. That means the effective value of the contract is still at $500,000. Nothing changes there. The seller doesn't get notified saying, "Hey, the property is actually worth 520." The appraisal is yours and yours alone as the buyer. So you're walking into $20,000 of equity at closing. The second scenario, which isn't ideal, but there is still ways to work around this, is where the appraised value is actually lower than the sales price. Like I mentioned, the effective value is going to be the lower of the sales price or the appraised value. And so if the appraised value comes back at 475, that means the effective value is 475. Our loan terms will then have to be off of the 475 amount compared to the 500 where it was original. So in most cases, like in this case, there's a couple ways you can do it, but you could either, as the buyer, bring in the difference between the appraised value and the sales price as additional out of pocket cash to close. So an additional $25,000 can make up the gap. Or we could ask, and this is where, maybe Jessica, you can go through it, but asking the seller to maybe reduce the sales price a bit or meet in the middle.
hmm Yeah, exactly. So you kind of have those three options where you can decide, you know, I mean, we would always start by asking the seller to reduce the price of the home because essentially it's saying, your home is worth $475,000. Um, then there's the option of meeting in the middle. So maybe both of you they reduce the house price by half, and then you bring in the other half to kind of meet that. Or they say they're not going to reduce, and you just love the house so much, it's worth it to you. Yeah, so when it comes to the appraisal, you have three different choices. So if it comes in under the list price, we'll always start by asking the selling party to reduce the price of the home because essentially the appraiser is saying that's what the home is worth. If we can't come to the meeting of the minds on that, then you have the option of splitting it two ways. So maybe the seller reduces the price of the home by half of the 25,000, and then you make up the other half of the 25,000. You would bring it to closing, just add it to your closing. Or if the seller just said, we're not budging at all, and you decided, okay, I love this house so much, it's worth it to me to make up the difference, then you could pay that $25,000. And this is also another one of your contingencies, which means that if you can't come to a meeting of the minds on it, you do have the option to terminate the deal and walk away, and you would still get your earnest money back.
Now, after the appraisal, we're getting to closing. Congratulations. We've submitted your appraisal. We've submitted the additional documentation that we got after our conditional approval from underwriting, and we've gotten now you're clear to close, which means that the underwriting has given off their final approval. Essentially, all the documentation provided based on the loan terms. Now you're good to go. Nothing else is needed. The final walkthrough.
The final walkthrough. So once we get about a day or two before our closing date, we'll go to the house and we'll do a final walkthrough. And this just means we're going to, take a quick view of the home. And we might be looking for any kind of repairs that they have committed to making. We'll make sure that those get done before closing as well. And then two, we're just making sure that when they moved out, if they hadn't moved out previously, that they left the home in the same condition that you saw it when we went to view it the first time. So there isn't any new damage to the home. They didn't leave any bulky furniture items, things like that. Or sometimes when you view a home, people will still be living there, so their furniture will be there. And then what you find is that when they move that big bed out of the bedroom, sometimes there's a hole in the carpet or something like that. So this is kind of our final chance to see the home. And if anything is different from how we saw it, or if we want to ask for anything at the last minute, this is our chance. If not, then we just are really excited and you get to just see your home again. And this is when you really start picturing your furniture in there and you picture yourself living in there.
And then as a part of this, your closing disclosure is going to be the document that will come out from us, the lender. The initial estimate on the cost and the prepaids and the final dollar amount that you'll bring in at closing, that is the loan estimate, which is sent up front. The closing disclosure is going to be more accurate as we've verified third-party fees and costs. So you'll want to review your closing disclosure, make sure that that's where things were based on the numbers that I was given to you throughout the process and where you expect to come in with your money at closing. And then at that point, if we have your final approval, we could see if there is the potential to close early on the transaction, depending on if the seller is willing and able to, and if we have time to do so. So final steps, you're then going to get your closing signing scheduled. So that's going to be officially committing to the loan for the loan terms, signing pen to paper. You're not committing to anything up until this point of the process, but then once you're signing final papers at closing, then that's when you're going to be committing to the loan terms. You'll get a copy of all of your closing documents, including your first payment, where to send that check to, how that's going to happen. You'll also then pick up your wiring instructions from that signing meeting, and you'll drop off the wiring instructions at your bank so that they can wire the funds directly to escrow to take care of the rest of the funds needed for closing. You'll then get your keys from Jessica once the transaction has recorded with the county.
Yeah, and something to keep in mind is that term closing can be a little bit confusing. So when we hear from the title company and you get your signing scheduled, then you'll meet at the office with the title rep, and I will be there as well. And you'll sign all of your documents, and it's really exciting, but that is not technically your closing day. A lot of people think that it is once you sign that you're closed. So you won't get your keys at the signing table. So closing actually means that all of your documents are signed, your funds are transferred, and then the county has to record the transaction, which usually happens the next day or a couple of days later. It can happen the same day sometimes, but your house will not be closed. You will not be the official owner of the house until the county has recorded that transaction. And once we get word that they have, then you are the official owner of your house and we will meet to get your keys.
And typically it just depends on when your signing is lined up on that day. If typically the county has like a 2 p.m. cutoff, so all the documents have to be signed, recorded, and all that by 2 p.m. in order for you to record the same day. If not, then it would roll to the next day. Now, first payment and beyond with the mortgage. So your first payment is usually due in over 30 days. Let's say you close in March. When you close in March, you're going to prepay through the end of that month. Your first payment will build up throughout April. Your first payment won't be due until May 1st. So that first payment usually is due over 30 days after your closing. So it gives you a little bit of time. Your principal and interest payment won't change if it's a fixed rate loan. So if you have a 30-year fixed loan, none of the loan terms will change for that entirety of the 30 years. Your principal and interest, the amount that you're paying on the mortgage specifically, will not change. Your taxes and insurance will likely change every year. The county will go out and reassess the value of your property every year. The tax assessment might change, so your property taxes will go up or go down every year. Your homeowner's insurance very well might change as well. So just be on the lookout for those numbers to change on a year-over-year basis. So that does it for our one-stop home buying guide. Thank you to those of you that stuck around and watched this. And for myself and for Jessica, thank you. And we hope to talk to you soon.
Bye.